It's pretty important. Okay, now going through the smaller time frame, we go back one down on the weekly. All right, now the weekly dictates that the bulls are in control. We have a new higher high that formed pretty much either today or yesterday, and it is trying to stabilize itself. But then again, being Monday heading towards a Tuesday, there's still another 4 more trading business days in order for the week to finish. Obviously, from last week's bullish bar right here, the bulls are currently in control. We can see that 119, 177 is strong, but the 123.28 is the highest. So that will be very strong from this point forward. But we cannot ignore that 120 level. Okay. 120 is also very important, and why do we need to say that is because of 2010, around this point, 2008, cutting across, went back up. See all the way to 2002 as well, and that is pretty much it. Nice big gap in 1999. So 123. So 123.28 is very really important number, and that is it. Okay, now going back. Based on the weekly, so it's currently running out of steam, and Euro has reached the first area where it's currently being tested by sellers. But we need to be careful because these bar right here, the bulls are still currently in control. So there's still an odds and probability that this week is just currently forming a low. So if it's going to create a new low, then it will hit a demand level. And that demand is pretty solid too. You can see here around the 117, 118. Okay, from the current price of 118.84 all the way to 118.80 pips. From the current price yesterday, 119.42, 119, 118, approximately about 100 pips, right? And you go through from 119.84, 120, which is the high of today, 120.12, all the way to 118. That's 200 pips. So there's a good probability that the price can go to the 118 area. Okay, let's go through looking at the daily chart. Hey, if you see here to yesterday, there was a gap, nice big gap in order for the price, actually when it jumped from the closing to the opening due to some certain reports, created a doji, filled in that gap. Likewise now with the current price, creating now a new lower low, lower high, where it can go all the way to 117.90, 118. If we really want to really be specific, then we need to create our fib level from top to bottom. And so Fibonacci states, based on this low here as well, 117.63 even. So there's that level of demand, and also with that retracement of 117.64. So there's another approximately 120 pips in order for the price to retrace itself. Probably just 1 or 2 days, because it's so volatile at the moment, a lot of liquidity, that it can go to 118 or to the first level retracement pretty much tomorrow, or pretty much in the next 12 hours or the next 2 days. So there's the probability that it can come back all the way down to correct itself a little bit. Okay, So let's find some form of evidence. Now these are something that I do love to when I'm actually trading method 1. Since the bar is currently now being shown at the moment being red, something like this when it comes to dojis are awesome. And now if we go through a smaller time frame like a 4-hour or 1 hour, when price has been created like a higher high, higher low, and the next part of the series should be really a new higher high. But there's a failure in terms of price to go past the new high, then that is a sign for me of weakness. And what evidence would I have as a trader? Easy. If when price is in an uptrend and they will test certain areas, so say for example here create a new high, higher low, higher high, new lower low. This is pretty much part of the correction before continuation. Higher high, higher low, didn't really want to correct itself. 1, 2, 3, 4, 5, then all of a sudden, boom, continuation of that momentum. So there's more of the impulsion that's currently creating impulse. Didn't want to impulse. Okay, now from this whole picture right here, and now it corrected the first time. Notice how the second time that price didn't want to continue over to the last high. So earlier today, this is similar with the dollar yen, this is similar with the pound yen. When we were analyzing earlier with during the daily trading routine, the price was around, I got it at 119.70, 119.80 here, 14, 1500, 1600. So the price even went to continue further around this point, and then all of a sudden, an hour later, it went all the way to 119.98. Stop was at about 120.19. So just willing to put the ratio basically 7 pips above the high. Okay, then there was something occurred in terms of report, and then bingo, drop 100 pips pretty much in 2 hours, 140 pips in pretty much 2 hours. So everything now that this, or everything that it worked hard for in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, say 12 hours, 13 hours, dropped pretty much in 2 hours. That is not a good sign. Then that means that people who already bought pretty much at the very bottom, they're currently taking profits at the moment. Profit taking, even though longer term, we are still pretty much very bullish. Monthly, there's still a lot of signs that can go to 123. But these are the levels that we can only make money on. This was also part of the level where we can also just make money on 118.59. Hence the first level of demand. Then you have 118.27, really good demand, and the real big floor is a 117.89, 117.75, and also that 117.63. Okay, now the whole point now here is that if the price comes back to the supply where there's so many buyers already, it's kind of just way too much exhausted, and then you see that, and then all of a sudden it's currently exhausted, and the highs no longer want to pursue the other high, part of the doji. That's when I don't actually hesitate to sell. Worst case scenario is that I get stopped out with that high, or not, still a very small risk. The number one challenging part of that is, if you get stopped out, say 2 in a row, then you get stopped 3 out of 3 in a row, and you get hurt, your feelings get hurt, and all of a sudden you don't want to do it anymore because you're just sick of losing, and you're almost there at the verge, and by the time you quit, that's where the market is basically saying, hey, come on, don't quit, give me your best shot. And that's when you should knock him out, right? That's, in fighting, like when we compete, it's part of competition where you get hit. You get hit to the head, you get hit to the body, you get hit to the legs, you go home as limping, you got a lot of bruises. It's just part of the game, and you do it because you love it. Now, in training, it's no different. You can get hit in the face, you can get hit in the body, but the only thing that's being hit is mainly your account. But if you take a right opportunity and you just know the opportunity comes, you gotta hit back, and that's when the profitability will also have to come in place. But obviously, the stop loss is always going to be the defense mechanism. A calculated risk on what you're basically bound to like what you're happy with. So even if they knock you out, there's a calculated knockout there and then, but like in actual real fighting, there's no such thing, because power and speed of the other person, you don't know based on their skill as well. As when we're trading all the time against professionals, and you're on Olympic level pretty much on a day-to-day basis, not on a amateur level, right? So if you get, if you have losses after losses, this is where it's time to reflect. Okay, great, it might have been a loss, but what I should do once again, should I really dwell on it, or should I really look into it more objectively once again in order for a opportunity to happen? When we dwell about something way too much as well, sometimes it is also dangerous, because we're no longer thinking straight. We're just thinking about the actual loss rather than thinking what we really should do in terms of reaction. And if something basically already has gone against you, where if you miss the price, don't worry, find a trade that or wait for another opportunity until it can either come back, or don't even trade at all, or just leave it, right? Okay, so now in terms of M1, we can go against the retracements all the time to a certain degree, but when the market is to the upside, if you really want to play it safe, don't go against it. Based on your skill, wait until it comes back down to the correction, and this is where you buy. Similar pretty much what we did with the euro against the dollar, pound against the dollar. So meaning then that if this is pretty much the trend, looking at the daily, secondary right there, primary, secondary. So that means then that if the price comes back to 117, 116, mainly probably the 116, the next 1, 2, 3, 4, who knows, 4, 5, so the January 17th, which is around this point, then we are within the trend, and the probability of winning to go to the upside is highly probable. So, but in this level, there's still, I reckon there's definitely some more room in order for this price to head back to around 115, 117, but definitely 118 is where I'll be thinking it very clearly. In and out, take profit, and pretty much run. Even though probably there's some room around here. But the plan is that I'm against the trend, and once it reaches the first level demand, I'm pretty much out. All right, any questions? Right, so in terms of MTFA, all the way heading towards, see, I went all the way from 1L.
Yeah, I got one.
Go for it, Phil.
When you say trend, which trend are you looking at? Intention to swing trade, daily or the weekly?
Okay, let me go through again. So when we said earlier, the trend is pretty much, it's an uptrend, right?
Yep.
But however, it hasn't even created a higher lows yet. Last week, the bulls are in control. Can't deny that. But in order for the week, it needs to create a low. That low within the daily will create a higher low. So higher high, higher low. So we can see here it is clearly it's an uptrend. So it is an uptrend, and I'm going against the trend. So like I said, option 1, if you don't have the skill set as yet, wait until the price can come back down to the correction retracement level, touching either the primary or the secondary uptrend. So in other words, you don't trade, wait for it until the price can come back down around this guideline right here, this guidance system, which is your trend lines. So if it comes around here, this is where you need to buy. But because in terms of skills, I can see and feel a little bit more differently than you guys, because on the 4 hours, 1 hour, there's already a lot of evidence that the price cannot pursue above 120.12, and hence that's why I shorted. Now, this is where, what is the intention of the trade? You keep asking me the intention of the trade. Well, this is obviously a swing trade. It will take 1, 2, or probably 3 or 4 days in order to reach to my target point. 118, since some of the targets that I put it with you guys about 118.40, 118.30, something like that. But the 118 is a really good demand level that the price can drop down to. It's highly probable that in terms of the probability that the price can drop to 118 is highly probable. So that's only 80 pips pretty much. Can it take there in 1 day? It can, or it could, depending on what reports on the news based. Can it take 2 days? Definitely. But the price cannot just continue to go to the upside. Now, if we're going to see some consolidation around here, then it will establish a demand, probably 118.62 will establish a demand, then if it doesn't want to even go to 118, then I'm out. So, to answer now your question, if you're such a swing trader, well, it all depends. There's a small, medium, or short-term, medium-term, longer-term swing trading. Short-term, medium trading, then we can have we can short this one because it can come back in probably 1 or 2 days. If you're talking medium-term swing trading, then you cannot short. You need to wait, you need to buy because the bulls are currently in control and it has some room in order to go to 123.28. If you're talking here longer-term type of swing trading, then definitely the bulls are still in control. It can go to 123.28. There's another 300 pips up there waiting for buyers pretty much until it breaks or we can see some form of doji or whatnot, then you can basically sell. Okay, so I answered your question clearly. Do you understand it on your end clearly, Phil?
No. The question was, which trend lines do you use? Which trend do you use, the daily or the weekly?
What are you talking about? I already explained to you. So which trend lines do I use in terms of the daily or the weekly?
Yeah.
I'm using the daily right here.
On the daily. Okay, thanks.
Okay. All right. Any other questions?
Hey, just wondering why you're using NetDania, not FXCM charts.
It's just there's no difference. I'm just basically looking into it because I just had it in front of my screen.
Oh, okay. Cool.
A chart is a chart. Once you know charts, regardless whether you're FXM, NetDania, you're using TradeStation, you're using CMC, a chart is a chart. There should be no difference in terms of analysis, M1, M2, or M3. especially M1. Okay, if even you have a real estate chart, you can have bar charts, open, high, low, close chart, candlestick chart. A chart is a chart. If you can read a chart, you would know what the chart will do. Okay, so let's go through this then. Open up your trading platforms. Let's want you guys to see in terms of drawing your support and resistance lines. Let's make it a little bit more cleaner, back to basics. Okay, let's clear everything over here. Alrighty. Do you guys have your screens in front of you based on your charts? Let's go through a different one. Let's look at something random. Pound yen as a random. Okay, first question. Which part of the open, high, low, close that institutions are actually looking at or in full control? The open, the high, the low, or the close?
The high and the low.
Right, Anthony says the high and the low. JP.
The closed.
Okay, JP says the close. Phil.
Close.
Close. Wrong. Okay, every open, high, and low close, it is always going to be the high and the low where institutions will be supporting and resisting prices. The close will be dictated by an institution as well. We agree. And the opening is mainly the averaging based on amateurs and so forth, especially in the stock market where at the very beginning amateurs will open, professionals will dictate the close. But in terms within the day, the high and the low is very important in terms of supporting prices. It will be institutions, not you and I. Resistance of prices will be dictated by institution. Okay, now we're gonna definitely make it a little bit more objective in terms of drawing our support and resistance lines. So so for example, from here, we need this time just to put the major resistance line at the high. If you consider the past highs, where will be the actual high itself? Well, the actual high is 144.80. Okay, from this point of view, where now that price of 144.80, could it be you and I to dictate the actual price of the high 144.80?
No, we're not the one dictating it.
Okay, Anthony says not us. How about JP and Phil?
No.
No. How about you, Phil?
No.
No, absolutely. Okay, then if the price, now the closing is also very important because we need to dictate, or we need to see where did the price close. Obviously, if the price closed at the high, then that's awesome because the probability it can continue to go further is highly probable. But if the close closed equal or lower than the opening, then we need to see in the past as well whether if the closing price closed below the high, that is the high which is also the opening, didn't want to go through further. The day before was the high, the closing closed below that high. So this levels now is creating what we call now an area of supply. 144.42, 144.80. There's a 38 range, 38 pip range between the two. Okay, let's also see the high of today. Look at the high of today. The high of today didn't want to pursue above 144.42, 144.80. So everything around this point, within these supply levels, these prices are very, very significant, very important. Now, if price didn't want to go above 144.42, 144.80, what is it telling us then? What is it telling us? If the price doesn't want to go above 144.42, 144.80, even say with the current high of this, since the price currently is at 142.85. Whoa, 142.85, sweet. Okay, the price didn't want to go above yesterday's high, the high from 2 days ago and the high of 3 days ago. What is it telling?
Now wants to go above those prices.
Too expensive.
Too expensive. So when something is too expensive, are you really gonna buy it?
Nope.
No.
Yeah, absolutely. You won't buy it. Okay, let's move. Because there's nothing in the past that dictates that 144.42, 144.80 is also being resisted by somewhere in the past. So we need to go through on the bigger time frame. Look at the weekly. There's even nothing on the weekly. Let's go through the monthly. Okay. So we can see on the monthly then that based on the 144.80, 2010, almost 3 years ago, that the price has been resisted and then it continued to drop. Still pretty much in the lower lows right here, but we also established that the euro against the yen has been broken out based on the primary downtrend. So we are definitely in the new trend. Higher high, higher low, higher high, higher low, higher high. Resistance level, supply level. We have another one too right there on that high, 145.98. 145.98. Okay, so we have established that the past 3 years, first time that it reached that supply level. After 3 years, it touched that 144.42, 144.80. Okay, these are the things that we need to discuss. What caused the price to go to the upside and boost it around here?
The news announcement.
News announcement, what happened last week, right? Okay, oops. Delete that. Okay, let me go through high and low. 1, 2. What happens if I cut across? What happens if I take that as well? Okay, but really to be more objective, like that and there. Therefore, there's some high probability. Okay, let me now look into the lows. What is the low of this? 142.61. What is the high of this? 142.75. So the price also broke that high. There were some point in time, there were some sellers and pushed all the way to break that high right there. And therefore, there is a high probability that the price of the pound against the yen can come down to 141.84. Another 70 pips to the down. 70 to 100, pretty much 10, because it's 142.92. Sorry, yeah, 110 pips to the downside. If it chooses to. So there is now a range between 2 points. Here's a demand level. Here's a much stronger level of demand. This one is pretty weak. Why? Because there's really nothing supporting it from there to there, hence the price came back down. At least over here there's a lot of floors that it's being supported. 1, 2, 3, 4 in terms of the closing price. So the odds and probability that the price can come down over here is now highly probable. Okay, now in terms of areas of supply, creating that high, we look into that high, the current high on this one, there's a range between 3 points actually. Spotlight here, 3 points. Okay, it's a highlighter. Now there's also a range between 2 points. It's kind of pretty big, 141.84, 142.60. But if we minimize that into a smaller time frame, like the 4 hours or even the 1 hour, here's a demand which will break, becomes a supply to have the stronger demand level 141.84. And also you can see here in a smaller time frame, higher highs, right, from higher high perspective becomes lower highs, lower lows. Doesn't even want to create a new lower high, lower low. Even if there is going to be some form of reporting, the odds and probability that the price can still drop is still going to pursue down here, because there's still some empty space in the 142.50. Obviously you need to break that, but it's pretty weak. From what we discussed, or from what I show you in the bigger time frame, they have to come back down on this point. Once again, the price doesn't just want to drop or doesn't want to go up just in a straight line. And for pattern traders, here's a perfect, pretty much head and shoulders distance from head to the neckline, neckline to the new head is also pretty much around here. So the lows we created on a new lower lows, neckline's been broken. Odds and probability to go around this point is highly probable. Okay? So now your exercise for the next 10 minutes, I want you to go back to your daily, draw support and resistance lines, follow, choose any pair that you want in your platform, and just connect the highs for now and also the lows. Lows are being dictated by institutions, not retail traders. And within the lows, you will create areas of demand or supply. Alright, give you guys 46, 50, 55, 9 minutes. Actually, let's just do 5 minutes and we're gonna go through each person. Alright, over and out. Alright, let's go through with starting from Phil. Start from the bottom. Hey, we start from, oops. Phil.
Cool, I chose euro pound.
Okay.
Selected 6 months or more because there's 180 candles on there. And all I've done is put the red lines on the high and the candles just circled the peaks and troughs. And that's what I ended up with. So current price, there's nothing there, so I go to a bigger time frame to find out where a stronger price is. And there it is. But the exercise was on the daily, so.
Okie dokie, thank you. Right, nice. And then we clean it up afterwards. Okay, nice. Okay, good. Alrighty. Next one is JP.
Yeah. I got the euro and the dollar.
Alright. Okay. Hello, Phil. JP, sorry, hello.
Yeah, no, yeah, sorry.
Okay. Let's have a look on what you've done. Alright, so 134.01, great. See how the high of today?
Mm-hmm.
Right, you need to put one there as well on the high of today, which creates now a new range right there between 133.92, 134.01. Okay, since 133.63 has been broken, awesome, so we don't need to include that anymore, right, because the price got broken. So the next one is 133.34.
Yeah.
Alright, then 132.95, see how there's really nothing there connecting in terms of where would you put that line of 132.95? Where would you put it at? Excellent. So 133.07. So that will be the next price that the price will go to. And look at the high as well on the next, the blue high right there. Okay, it's right, so 132.90. So there is that narrow range of the demand level between 132.80, 133. So about there's 20 pip difference between that. So what are now the odds and probability that the price can go through there, do you think, to the downside?
Highly probable.
Okay, highly probable. So see how much better, cleaner, and then when the price is no longer going to be valid, then that's where we erase the lines.
Okay.
Or if the price will now rebound between 132.80 or 133, then you see a clearer picture, then the price can come back again into the 133.92, 134. Awesome. All right. Questions on that one, JP?
No, that's quite good. Thank you.
Perfect. Okay, Anthony, your turn. Let's see what you've got.
The Aussie Swiss.
Okay. All right, let's start first. Magnify your chart. Let's get rid first of the trends, please. Okay, your trend definitely still needs to be fixed up. Right. All right, let's go through with the current bar. Always start with the current bar. So we're gonna need to put as well a because we need to identify why did the high didn't want to pursue beyond that. Okay, so 97 77. So there is now a range between 3 points, 97.77 and 97.80 or something, 97, something like that. But there's that. Okay, now if the price then doesn't want to go through beyond that, and it's currently sitting to where it's at, we're also on that low. Does that low hitting anything? Yes, the open high, it's hitting open high and the low, pretty much 12 to 12, right, around that level, and then there's one in the past. So there's a really good significant demand within that price, 97.27. The bulls are in control. What are the odds? If this is currently trying to stabilize itself, what are the odds that the price can break 97? What's that high of that one on the red bar? That one, 97.80.
The high of this,
Yes.
the high of this one will be
97.83.
97.83.
Right, so if bulls are currently in control from yesterday, what the odds and pro that it may break the high of that one? 97.83.
That it will break this one. If the bulls are in control, then I suppose it's highly probable.
Alright, cool. Highly probable. Now if it breaks through that, where will be now the next price? Kind of check it in the past. Great, 98.04. Then they have to break 98.04. Is 98.04 really significant? Yes, it is. And the next price to beat is at 98.24. Okay, so in terms of logic, see how price has to break through certain price movements first before it can really break the last major high. Okay, so that's the logic behind it. But technically speaking, is it an uptrend or a downtrend?
This is a downtrend.
Exactly. So which high that needs to be broken or needs to break in order for the trend to break?
In order for this trend to break, it'll need to break this one right here.
What else?
363 and this one.
Where is really the last high?
The last high, I guess, it would be here, 97.84.
Correct. Alright, cool. Alright, there you go. Well then, Anthony. Okay, let's have a look. Last but not the least will be M. Let's see what you got.
Okay, I got Aussie against the dollar. Sellers in control at the moment. That's the high of this candle right here. Didn't want to go past the high of this candle here, and also the highs of this candle here. So in terms of lows, the first low will be the low of this candle, which also got hit in the past as well. Then if it breaks that, then here's the next level of demand. If it breaks that, then there's more, but there's two levels that needs to break first. If it doesn't want to go to these levels, then this is the next highs right here, and then that will be the next high that we will beat.
Alright, let's have a quick look. High, there's a high. Alright, and that one goes over there, but the price already did break over there. Yeah, within that low. Okay, cool. Then there's also a range. Alright, see how, yeah, you put the low of yesterday, right? And then notice how approximately the 17th or the 16th of the 12, 16, 15, 14, and 13. So within those lows. Now, if sellers are in control currently, what are the odds and probability that the price can go down to 105.33 and 105.20?
It has high Highly probable.
High probability. Okay, perfect. Nice. All right, 6 o'clock. Don't know whether can we just switch to the next class and we can continue? Right, it's gonna be cool in the next one. Right, so I'll stop this recording. I'll stop the session. Then I'll see you guys in the next one. Okay.
Okay.
All right.
See you there.
Well done,
Bye-bye.
guys. Bye.